Top 10 stocks to possibly buy now. Let's get into it. We're looking at market-io here, guys. They give us a weekly top 10 rankings of stocks. They also give us weekly opportunities, long-term wealth builders, innovative leaders, and dividend plays. We're going to be going through all of these today. I'm going to give my analysis, going to give my basically opinion, whether I think they're undervalued, fair valued, or overvalued. So let's get into it. UNH is number one. I think UNH right now at $313.58 is undervalued. We're talking about a moat. We're talking about the largest health insurance company in the world. And we're talking about a company that's been around for a very long time. They are a legacy company. They are a dinosaur, but they're very cheap right now. They are priced for the bargain bin, and I believe they are a good buy, undervalued. PayPal. I hate PayPal. I just had a really bad experience with PayPal recently. They basically froze my business account that I had with them, that I had subscriptions going through. They froze it, didn't tell me why, and they are going to hold my money for up to 180 days right now. So I don't like PayPal. I'm not going to comment on the stock at all. Yeah, at all. I can honestly see why they have just been destroyed for their stock price just based off their customer service, how they treated me, and them freezing my account for up to 180 days. And I posted this to X, and I had 10 to 15 other people come out and tell me that PayPal did the same exact thing to them. Not a good business model. Not a good business model. Alibaba, undervalued. I think Alibaba is undervalued. They are the largest player in China. If you want access to China, Alibaba is your path to that access into China, which is one of the largest growing economies in the world right now, based on GDP. Number 4, Amazon. Amazon, undervalued. I think Amazon's one of those companies that you can honestly just dollar cost average into month after month after month after month. They are going to reach $1 trillion in revenue. They have Amazon Web Services. They have the largest web service. They have the largest cloud out there. They're crushing their opponents in Microsoft and Google. They are just becoming a necessity for people in America. And they're growing internationally as well too. They're just becoming a necessity for people. If you need something quick, if you need something, you just go to Amazon and you order it. They're becoming a need, not a want anymore. Their subscriptions looked at as a need now. So Amazon's just one of those companies. I think it's a dollar. You can dollar cost average into it month in, month out for the foreseeable future, and you'll continue to get a good return on your investment on that. Adobe, undervalued, fair value, overvalued. I think Adobe's undervalued, but there is definitely a big risk. There's a big risk based on AI and a company that I'm very highly invested in, Zeta. Zeta Global. I love this company. I think it's a great company. It's like a $5 billion market cap. I think they're going places. I think they're going to be huge. And Adobe's one of their competitors, and I think they're eating their lunch, as well as Salesforce and Oracle. I think Zeta is eating all their lunches right now, and it's only going to get worse. And so Adobe with the AI scares and their products not really being that great. I use Adobe products and they're not that great compared to ChatGPT and all these other companies. So it's undervalued, but there is a very, very, very high risk, in my opinion, medium to high risk, that they can be disrupted with AI. Google, number 6, 284. I was calling Google out as a screaming double up buy, basically sub 160. At this time, Google's at 285. I think Google is fair value to slightly overvalued. I wouldn't be running to your brokerage to buy into Google at these prices. I would wait for a pullback. I do think Google's a great company. I think they'll be great long term. I just don't love the risk reward right now. And I was a big buyer at lower prices. Number 7, AMD. AMD's relentless ascent, AI momentum, and market share gains power top ranking status. AMD is a great company, but I think at 230 they are slightly overvalued. I would like to see them back at 200 or slightly under 200 to consider, starting to get into a position in this company or buy into this company. Right now, it's a cyclical company. A lot of AI scares out there with depreciation, and I do think they're starting to catch up to Nvidia a little bit. But yeah, for me, it's too cyclical. I think the trade or the investment was over the last couple years in AMD and Nvidia, and now your chance to make really really good money on these companies is drastically less. So to me, slightly overvalued. I'll pass on AMD. Remember, you only have so many bullets in your chamber. You only have so many bullets in your chamber, so you really got to have that high conviction in the companies you're picking, and you really have to not be invested in 20 plus companies, 15 plus companies. You really need to narrow this down to, depending on how much money you have, you really need to narrow it down to a few, 5, 10, 15, no more than 20. But as you go higher and higher, with how many stocks you have, realistically, you don't want to be at 20 stocks unless you have millions and millions of dollars under your belt, to be totally honest. The less money you have, the less stocks you want because you need to be more convicted into a few stocks, so you can focus on those, put your small amount of money to work for you and grow it exponentially. Tesla's a perfect example. I had not so much money in 2017, 2018. I put a lot of my money into Tesla and it compounded greatly. I took $11,000 into over $300,000 on Tesla. So, yeah, when you don't have as much funds, you don't need to YOLO into things or be a degenerate gambler or anything like that. But you need to really, find those companies that you have the most conviction in and just kind of leave out the rest. Like find like your top two or top three stocks that you have the most conviction in, go after those and put your money to work on those and just find those areas to buy in. Now, Tesla here, Tesla, Tesla's like pretty much always overvalued because it's more so about the storyline and where they're going and where people, robotics and self-driving cars and all this stuff. If they actually hit on those items, then yes, they're undervalued. If they actually hit on those items in the near term, then yes, they are undervalued. If they don't, and if you're just basing the company based off the fundamentals and the numbers right now, they are severely overvalued. But that's been the story for Tesla for a very, very long time. I don't like how they're letting so many companies eat their lunch in the EV space. So they really need energy, robotics, and self-driving cars to really work out for them because if they don't, they're not winning this EV space anymore. They've been passed up by many, many competitors, especially in China. So Tesla overvalued, but if you believe in the story and you have high conviction and that Elon Musk is going to deliver on robotics, self-driving cars, energy, all this different stuff, then yeah, you can buy today. Pepsi is to me um undervalued. Not a company I usually go for. Again, you only have so many bullets in your chamber. I'm not going to waste one on Pepsi. That's just me personally. It's a pass for me. I think Coca-Cola is way better. I think it tastes better. I think their products are better. So for me, I wouldn't be buying it just based off the products I use anyways, like Coke Zero compared to like Pepsi Max or Pepsi Zero or whatever. So yeah, Pepsi's a pass for me. Not, something that I'd be invested in. But if you're out there and you're looking for value or safety, Pepsi's definitely could scratch that itch for you. That's number 9. Number 10, Nike. Nike at $62. I think Nike, it's a turnaround story. Yep. Look, Nike's turnaround playbook, why Nike is poised for a strong rebound. I think they're undervalued. I think they're a good buy here. And I think the turnaround continues. The brand and the mode is there. It can continue to climb, climb, climb. I'm not invested in this company. Again, usually not my cup of tea. But again, if you're looking for value, a dividend play, you're looking for a rebound or something in the retail space, then Nike definitely scratches that itch. I think it's a great undervalued company, just not really for me right now. Weekly opportunities, PayPal, no. Nova Nordisk. Nova Nordisk is undervalued. Me personally, I'm waiting until, let's see, NVO. For me personally, I'm waiting for Nova Nordisk to kind of curl up on my strategies, on my indicators. I'm waiting for it to curl up to tell me, hey, we finally bought them because we've just been in this downtrend, downtrend since September 2024. You can clearly see that we're in this downtrend. And I think as long as we stay under the 21 EMA or your smoothing line here, or what I call the axis, then as long as we're underneath these two, then you're going to continue down. We need to break above these two. Once we get that at like 65, 70 for right now, then you have the flip going on. And then I think this thing can really get moving back up into right 80s, 90s, 100 plus. So that's what I'm personally looking for. I'm not trying to catch a falling knife here. It is still a falling knife. So yeah, I'll pass for now. Nike just talked about that. UNH just talked about that. Comcast, big internet play. Also some television still. Again, a good defensive strength company. Not my cup of tea. And I don't know if it's undervalued or overvalued. I have not looked at the fundamentals. Long-term wealth builders. PayPal, we already talked about that. I'm good. Hard pass. Nike, definitely a good long-term wealth builder based on where they are now. If you believe in their brand, you believe in their moat, they can definitely climb back up to all-time highs eventually at 200 and some dollars or whatever. Pepsi, a safety play. Long-term wealth builder. I don't know. I don't think Pepsi is a long-term wealth builder. Um, and like this isn't something a 20 some year old should be invested in my opinion. This is more so like if you're closer to retirement, you should be looking at something like Pepsi for more stability, safety, and dividend. If you're in your 20s or 30s and you're looking to compound quicker, I would pass on Pepsi and like the safety plays. Alibaba, we already talked about that one. If you want exposure to China, this is your best play, honestly, in my opinion. Pfizer, if you want access to uh, big pharma, Pfizer's your play. I don't understand like biotech, like pharma and stuff. That's out of my circle of competence. I don't really mess with any of those companies. There's so many like trials and all this different stuff, FDA approval. I don't have the knowledge for it. I don't have the background in it. I just don't get it. So I just hard pass on these companies. UNH talked about that one. Target, is Target undervalued? I think Target is undervalued, but man, like don't ask me when it bottoms. I don't know when it bottoms. And if we go into higher inflation, a recession, a bear market or something, Target's not the place people go to. When money gets tight, things get tough, people go to Walmart. And that's where people are going to right now. So Target's already taken a hit. Target's had some issues in the news over the last couple years with some, just some different stuff. So I don't know. I think it is undervalued based on the numbers, based on the fundamentals, but Target's not something for me. I think there's better opportunities out there right now. Google, slightly overvalued. We talked about that. Already talked about Adobe. Already talked about Amazon. Innovative leaders. Tesla, talked about that one. That one, you're just investing in the story. You're not investing in the fundamentals right now because they're not there. Airbnb, I think this one's undervalued, but the big thing about Airbnb is there are a lot of competitors now to them that are coming into the space, and they just have so many issues with with local governments, mayors, all this different stuff about them doing Airbnbs and stuff. So great business model, cheap business model, great margins, undervalued. You just have to do your own research on that one and see. NU, I think, is undervalued. I think it's a great opportunity for the long term. Redefining digital banking in Latin America with record growth and innovation, and they're growing outside of Latin America now too. They're expanding, so I think this is a great company. I hold some positions in NU right now, and I think it's a great long term investment personally in the fintech space. Snowflake, I think, is based on the numbers, it's overvalued. But based on the story and where they can go, I think it is a decent buy today. Again, I wouldn't be lining up at the brokerage to buy into Snowflake right now because it is extended. But yeah, data is king. The farther we go with AI, the farther things go with technology, the more data there will be. You're already seeing it. So more data equals higher margins, higher revenue for Snowflake, Datadog, and Databricks. So I think Snowflake's a great long-term investment. I would wait for a dip though to get a better deal. Block, I'm not interested in Block. I think Block, Cash App, XYZ, whatever they want to call it, and then PayPal. I think there's just too many fintech players, and I think there's better opportunities like NU, Robinhood, and SoFi. Just not Robinhood and SoFi at these levels. I would wait for a little bit more of a dip. Lululemon, I would avoid it like the plague. Avoid it like the plague. They've been disrupted by Costco, BJ's. They've been disrupted by wholesalers making the same product, same quality, or slightly less quality for way cheaper. They've been disrupted. The brand's really hurting. The brand's not there. I would avoid it. Upstart, I think Pagayo, PGY is a way better play than Upstart. So that's just my personal opinion. So I don't know if they're undervalued or overvalued. I personally would just go with Pagayo, a company that I like way more. First Solar, First Solar. I think I don't know too much about the company, but I know they're trying to get into the whole helping of data center build outs. So the company's already ran a lot. I do think it's probably a little overvalued at this time. And yeah, but if you're looking for data center play, this could be one if you do your own research and look into it more. Shopify is such a great company. I was buying this company in the 50s and 60s, and then in April in the 70s. I think it's a great company. It's doubled, tripled since then. Um, I do have small positions left over in my private portfolios in Shopify, but right now, if you ask me, they are a bit overvalued. But again, the growth story, the innovation story, the e-commerce story, it's all there. They look really, really good for the long term. AVGO, great story, great long-term investment, but again, slightly overvalued. Finally, dividend plays. Probably gonna be similar names we already talked about. Nope. Simon Property Group. Don't really know this one. Might be a good dividend play. I don't know. UPS. I'm avoiding that like the plague. I think Amazon's a way better play. And then Amazon will eventually do dividends. For longest, don't know them. Wesco, don't know them. Brookfield, don't really know. I know Brookfield a little bit. Yeah, I don't really know these names to be totally. I know Hershey Company because I'm from Pennsylvania originally. I know Hershey Company. That's a good safety stock, good safety play right there. People love chocolate. They'll stay around forever probably. And you'll keep on getting your dividend there. So yeah, some good plays there, some not good plays. Looking at the charts, again, NVO I think needs to bottom out. PayPal, no, we're not going to look at PayPal. I hate PayPal. UNH, I think it did bottom out, and I think we're just waiting to break through here on this 21 EMA and the smoothing line. If we can flip to the upside here, then we will make our ways back to $600 per share on this company, and currently sitting at $309. So yeah, I do like this company for the long term. Amazon is sitting at key support right now, right here at this volume shelf, right here, basically slightly below the 21 EMA, and then right here on the smoothing line. We are pointed down. We are slightly bearish on the momentum, kind of mixed here on the volume momentum, kind of mixed, kind of curling up. But yeah, I think Amazon here is a good buy and just continue dollar cost average. Your smart money zone would be around $190 to $200 per share. That's what I really would be looking at adding back into this company. And you have this gap fill down here to like 195, 196 as well. Snowflake, like I said, they are extended. They are a bit overvalued, in my opinion. Still looking good, but you are starting to curl down. You're starting to lose momentum, So if they do roll over, you could see the 21 EMA down to 232, or you could see down to $206 per share down there to the smoothing line, or the axis, as I call it. And yeah, and also, guys, I didn't mention it, but if you want to do automatic technical analysis, you simply can come in here and you can type in like UNH on market-io, and then if you can do all this different technical analysis, well, you don't have to do anything. You just punch in the ticker, and then it'll tell you where whales are buying in dark pools. It'll give you the Fibonacci retracement levels. So it'll tell you, okay, so 267 to 290 is your smart money zone for smart money to be buying. Your 50, your 61, your 0.618, your 0.786, your 50, your 200 moving averages, your trend lines you can put on there, hidden whales, you can do RSI, MACD, you can do Bollinger Bands. I mean, it really does make it easy. And then it tells you like certain signals, and they're constantly updating this as well. Golden support, deep value zone, trade triggers, hidden whales, more buyers, more bullish buying than selling on UNH. And you can go in here and do this for any of these companies. So I think it is really, really good. Great site. I use it, makes things a lot simpler for me personally. And yeah, the rest of the week, it's going to be slower for me. We are moving this week. Won't be in my new setup until next week. And then you also have Thanksgiving. So things are going to be a little bit slower here on the channel, on X, and on YouTube, just making videos until I get my new setup and everything up and running. Yeah, I appreciate your guys' support, continuing to support me. 4,000 plus subscribers now. If you want to be a subscriber, click the link below, hit the notification bell so you don't miss any of my updates whenever I do start posting again or uploading new videos. And yeah, I really appreciate you guys continuing to support me in my passion and me talking about stocks. And I hope I continue to deliver value for you guys going forward. And yeah, here's to the new house and the move, and you know, a new setup, and kind of a whole new getting closer to my friends and some family. So really excited about it, guys. Hope you have a great day. If you have any comments, questions, anything like that, leave them below and hit that like button, please. Hope you guys have a great day, and catch you guys in the next one.